This is the MTPredictor weekly market update for June 30th. So we're at the end of a quarter, and we'll see where we are here in terms of the S&P. This is the S&P mini here we've been covering, and again we've already had our wave 4 target area here projected ahead of time. Our wave 5 target is up here just above 1700, and we did see a pullback basically to the top of the wave 4 support area. You can see that here, and with a blue buyers candle, that tells us that by the end of the week the buyers were overcoming the sellers. So we'll see then if we do rally off of this area heading into that wave 5 into the 1700 area here. Doesn't mean that we can't go lower here. We've got a lot of room even below 1500, and we'd still be in that wave 4 area. Again, if they go beyond this, if they take the wave 4 area out, then we can start looking at lower levels, probably around the 1300 level. Because the drop here, it could be bigger than anticipated. We'll see if this area doesn't hold. Some other things that we'll look at here. In fact, let's just look at the Dow on the weekly chart here, and you can see same pattern here in the Dow. Let's just pull this back. Wave 3 up, headed into wave 4. Hasn't quite reached the wave 4 target area there yet, but we did end the week with the blue buyers candle telling us the buyers were overcoming the sellers by the end of the week there. But this area here is a major weekly decision point resistance, and that comes off of the prior all-time high back in 2007. And so that is a significant area, and that is an area where we could anticipate that this correction could be deeper. If we look at the STF here, the reason I thought we might have a more shallow decision point, or a shallow pullback from this decision point, is the fact that we had strength on the STF. Now the strength has just come off a bit, so we'll see. But you know, we had this kind of looking for a similar pullback to what we had between wave 1 and wave 2, between 3 and 4. But we'll see if this, again, same analysis as the S&P. Here's your next support just below 12,000 if the wave 4 area gives way. All right, we already have projected up our wave 5 target just above 16,000. But again, this is a significant area. There's a large area here too that goes beyond 16,000. So we can go wave 5 up here and still technically be in this weekly decision point resistance area. All right, so we'll keep an eye on that. Again, we ended the week with some strength. We'll see if that carries through immediately into wave 5, or if we could consolidate a bit here. We could make an ABC pattern into a deeper wave 4 corrective move. A lot of things that we could do here, but we've got our next support, next resistance. All that is already on the chart ahead of time here. Let's look at the NQ. Again, same pattern. Heading into wave 4, that did achieve the wave 4 target there. Again, ended the week with buying. Your wave 5 target is projected there right around 3080. And then Russell, also again same pattern. Now the Russell pullback has been fairly shallow at this point, with buying again at the end of the week. Buyers overcoming sellers and not achieving the wave 4 support area. So this will still be a after wave 3 we're going to have that. This will be a wave 4, but the question is, will it get to the actual Fibonacci cluster of support in this range? It may not if the S&P holds, because the S&P is in its support. We saw the NQ is in its support. If they rally off those areas, and it may just carry everything up with it. All right, let's take a look at silver. This has been an interesting one. Here's the weekly chart. We had a wave 3 down here, almost to the maximum wave 3 down. We did trade below this weekly. So again, we had our 5 wave pattern up, that $50 top there basically, And once we go wave 5 up, typically we get a correction back to this wave 4. Again, we call the wave 4 DP, or decision point, and that's the area that we came into here. So what we look for next is if this area holds as support, then the trend which was up prior should continue up. If this area gives way, then that's when we look to the bottom. We find the bottom of wave 1. So here is our wave 1. We go to the bottom of wave 1. We take a decision point off of that level, and that gives us this level here. So what we had close, again, we had a bullish close by the end of the week. Silver did rally as well as gold, and they didn't get a convincing close below that level. So we'll look at the let me stretch this out a bit to this side. So we'll look at the low here. Let's just put the crosshairs on. And the low of $18.20. All right, what I'd really like to see in order to see more, be confident that we're going to get more downside and maybe test this $10 to $11 area here, would be to get a significant close, a clear close below this weekly decision point, and then whatever that low is on that week, that low gets taken out. That would be a good indication that they're heading down to the next support level. But pretty much we just traded below that level and then it kind of snapped back into that level there. So this could be an area, if you're looking to buy, you got a weekly bluish buyer's candle here telling us the buyers are overcoming the sellers. Let's just project wave 4 up here. Usually we don't want to be a buyer in wave 3 heading into wave 4, but this is also a weekly, significant weekly support area here. Let's just project up wave 4 and just see where that comes in on the weekly chart. So we're going to go up wave 4 here, click at 2 and a click at 3, and this gives us our wave 4 on the weekly chart. Looks like that will come in at right around 24.40. Alright, we get into the wave 4 and it heads all the way up to around 28 and change. So that area, if we do come up in there, then we could anticipate we could potentially get another rollover, and maybe we can get a a double bottom or wave 5, and then really get a corrective move happening back to the wave 4 decision point when that all plays, when that all plays out. So a couple of scenarios: a rally into wave 4 is a potential, or a breakdown into the major decision point off of the bottom of wave 1. So we'll keep an eye on that. The other interesting things, the prices here of gold and silver, when you look at a cost analysis of what it takes these miners on average to get an ounce of, let's say, silver out of the ground, their total cost, not the cash cost, but the total cost for them, to get an ounce of silver out of the ground is about, in that $20 level, maybe even a little more than that now. And so when we get silver trading below $20, all right, there's a discrepancy there. And I think if you remember back, I was a broker at Schwab. I remember Warren Buffett buying a ton of silver around, I think it was the $5 level. And one of the components to, I guess, the rationale of his buying there was the fact that silver then was below the cost. The spot price was below the cost to get an ounce out of the ground. That, and also that silver was at a inflation adjusted low. And so it's an interesting situation that we have in gold and silver, where they're actually trading below the true cost of mining it and getting it out of the ground. So we'll see. Doesn't mean that the paper price can't go lower, but If it does, I think we're going to see, we're seeing shortages and longer delivery times to buy to get your hands on the physical silver. And I think that will create, below $20. You get below $15. That's from what I'm hearing from a lot of the dealers, is that below $15 they feel is going to create a real pinch in getting deliveries, and it's going to increase the premiums. So again, we have that divergence going on. We've got I think halfway through the year, and we're on pace to break the last record. I think goes back to the 1960s for the demand in gold and silver, and we're on pace to beat that. So there's that. The central banks are purchasing more gold than the selling of the paper gold. So it's an interesting situation. It will get resolved. But in the meantime, the trade has been to sell the paper and buy the physical. All right, so let's move on. The dollar index, again, has got a little pop on Bernanke comments there. This target obviously has been hit. It's in that resistance level though, and then your next resistance right around that 85 there in the dollar. So we'll see if this area holds, then the trend which was up may turn and become a trend in the downward direction. If they take this area out to the upside, you've got some more resistance at 85, and then we'll look at this as another prominent swing that we can take we can take a decision point off of that. Wrong thing there. And get the next level just above 90. And then in turn, the euro obviously turned lower. There's the weekly sell signal still in play there. And the target on that one down around 1833. And so we'll see if that trend that began a couple weeks ago through last week will continue, or if we get some consolidation as the dollar is back in that resistance level. Oil, I don't have the chart for oil here, having a problem with the data coming in on this version with the oil, but basically we talked about this in the weekly market update. Oil is in one of the longest consolidation patterns in its history. It is in that 80, we looked at this many weeks now, 80 to 110 basically, with spikes to up to 120, and then immediately sell-offs back into the $110, $100 area. All right, so this won't last forever. It's lasted a very long time, but eventually it's going to break one way or the other, and it may take the rest of the commodities with it. We'll see. So we'll watch that, but you can mark those levels off on your charts. All right, so we'll leave it there. Some interesting stuff going on after the Fed meeting there. We'll see how this all gets resolved. Of course, the Fed has talked about being able to taper off. Just have some serious doubts as to whether they can talk about tapering off, but whether they're actually going to be able to do that, is a whole nother story. So, to me, everything that was in play with the gold and silver and that whole protecting yourself against the reckless government and the interventionist Fed policy is still there. Nothing's really changed except maybe the rhetoric, and the Fed has a very, very poor track record at determining economic upturns and downturns and so forth. So anyway, we'll leave it there. We'll see how this plays out. We'll come back next week and see. We should get a little better idea of where we are at in terms of that wave 4 in the stock market, heading into wave 5, and then silver, if it's in gold, if they're holding these levels and rallying into the weekly wave 4, or if they're going to break down that weekly 4 DP and we're heading to that maybe $10, $11 area in silver. All right, so we'll pick it back up next week. Have a good trading week, and we'll see you back then.